Welcome to IT Guy Stories Season 1 Episode 2. Today I'm going to tell you the real story about the wire transfer scam. And the client was calling to say they never received it. What unfolded over the next 48 hours was a masterclass in business email compromise. I'm going to walk you through the entire incident, step by step, with the lessons you can apply immediately. The attack began 3 weeks before the payment was made. The attacker had gained read access to a partner's email account. We later confirmed through audit logs that a successful login had occurred from a Nigerian IP address using a valid credential. The attacker spent 2 weeks doing nothing but reading emails. They were mapping the firm's relationships, payment processes, and communication patterns. This silent reconnaissance phase is what makes BEC so dangerous. There are no malware alerts, no unusual network traffic, just someone reading your business conversations. When a large client transaction was about to close, the attacker struck. They sent an email from the compromised partner account to the accounts team. The email stated that the client had requested payment to a new bank account for tax reasons. The email was sent from the real partner's account, so there was no spoofing to detect. It included realistic sounding details and referenced previous email threads. The accounts manager, trusting the source, processed the payment. The fraud was discovered when the legitimate client called to ask about the delayed payment. At that point, I was called in. My first action was to immediately reset the compromised partner's credentials and revoke all active sessions via Microsoft Entra ID. Second, I pulled the sign-in logs and found the initial unauthorized access, a single successful MFA bypass using a legacy authentication protocol. The attacker had used a tool to exploit the firm's lack of conditional access policies, blocking legacy auth. Without those policies, MFA was bypassed. Working backwards through the audit logs, I reconstructed the full timeline. Day 1, initial account compromise. Days 2 through 18. Passive email surveillance. Day 19. Attacker created an inbox rule to forward copies of financial emails to an external address and to auto-delete certain incoming messages. The inbox rule was the key forensic artifact. Attackers almost always create these rules to maintain visibility and prevent discovery. Day 21. Fraudulent payment instructions sent. Day 23. Fraud discovered. The attacker had 2 full weeks of insight before the final move. Immediately after the incident, we blocked legacy authentication across the entire tenant and enforced MFA for all users via conditional access. We implemented a financial controls policy requiring phone verification for all payments above a threshold. We also worked with the bank to attempt a recall. The recall was partially successful, but some funds were already gone. It was a costly lesson for the firm. Long-term, we implemented Microsoft Defender for Office 365 Plan 2 and configured alert policies for inbox rule creation. And we ran a mandatory security awareness session for all senior consultants and support staff. Human behavior is the final layer of defense. This incident was preventable. Every single control that would have stopped it existed in Microsoft 365. They just hadn't been configured. That's the reality for most consulting firms. The tools are there, but nobody has turned them on. Don't wait for a breach to act. In the next episode, I'll break down SPF, DKIM, and DMARC in plain English so you understand exactly what's protecting your email and what isn't. See you then.